Hey, I just wanted to ask about Fundrise. I've been interested and looked into it a little myself. I'd like to hear what you have to say about Graham Stephan's review video on it, going into deep detail and fees and about why someone made this in the first place, because I have some confliction between, what does it balance out to after the fees and how realistic is it? And if you could review that, I think that would help me make a better decision. Thank you, and I'll be happy to hear what you have to say.
Absolutely. So I believe their historical returns after fees are like 8 to 12%. Let me pull it up for you, actually. First of all, I respect Graham Stephan quite a bit. I think he has a lot of great content. He's obviously a really great YouTuber. He is obviously like a million times better of a YouTuber than I am. He's good. He's really good. And he's a real estate guy. He's like a realtor, right? That's his like thing. His knowledge on like complex investing concepts, I don't know. But let's look at the fees. So they do 15 basis points of advisory fees, which is lower than Vanguard's 30 basis points. Is that it? Oh no, and then they have an 85 basis point flat management fee. Okay, so all in fees from Fundrise are about 1%. That is better than a lot of mutual funds out there. I would almost ask you, if you bought private real estate, how much do you think you'd pay me to manage your properties? I'm gonna tell you, it's a lot more than 1%. So I think like I wouldn't focus on fees if they're fully loaded fees are 1% annually, and they're not taking carry, obviously. So I wouldn't worry about that. They're basically being a private e-REIT. And when you compare it against almost all the other opportunity costs, then it's like either comparable or better. I also really like their investment team. And I like their investment strategy, and I like how easy it is. And again, like I think if you have $500, I like the minimums. I don't know how they did that legally, but I like the minimums. You could just do $500 in there. And I like the locked up capital. I like, let's go historical performance right here. Post fee, net of fees, right? So average annualized returns net of fees from 14 to 19 in order from Fundrise. 12.25%, 12.42%, 8.76%, 11.44%, 9.11%, 9.47%. I guarantee you, like just personally, me and my friends own, and trust me, I will guarantee you I do more financial modeling on my real estate purchases than Graham does, just because I'm a nerd for that. And he probably gets great returns too. But if you go invest in like LA Prime, you're not getting those returns. So I just really, really like, I don't think that, okay, so here's another fact. Like buying Fundrise, you're buying in what they're saying, current annualized dividend yield. Everyone, like some people are really interested in dividend yield. Public real estate, like the Vanguard real estate ETF, it's like 3% on dividend yield, and Fundrise is like 5%. It's because it's private. It's kind of interesting because if it was a public thing, they could probably get higher valuations and stuff like that. And it's kind of deeper concepts about yield and yield spread. But yeah, I would just say if you're putting up historically last 6 years does not indicate future performance, obviously. Just from me, if you're putting up 9 to 13% returns annually, net of fees, that's after fees, I don't think you can go replicate that with how easy it is to just put in $500 to $1,000. And that's why it's the only one I've ever like considered partnering with, right? And I liked Fundrise and tried out Fundrise before they were even the current form. They started out doing like individual deals, which was really cool, but obviously kind of too complex for your average market. That said, like Graham's probably coming from a side that's more like my side. We've seen 25, 30% plus returns on our portfolio on probably 15 million in assets. We've killed it. We have tripled the returns that Fundrise have seen. But guess what? I spent about 500, maybe 5,000 times more brain damage and time and energy and my free time getting those returns for me and my friends than it is to just be like, sign up, $1,000. It's pretty cool to like mentally be like, oh, they've seen these types of returns in NFTs before. So again, I haven't seen Graham Stephan's videos. I don't have enough time to juggle a CFO job and do this stuff. And so my YouTube consumption's actually gone down. I like Graham Stephan. I think he's generally a level-headed guy, very frugal. He's probably like your younger Dave Ramsey. And I'm sure he's seen better returns net of fees, because he has no fees, on his real estate portfolio. But if he's going to, I don't think you can make the case that I would rather buy a public market REIT over Fundrise. I don't think I would, just personally, right? And I can, and so, we've talked about that for a lot. So, and again, I am a no bullshit person, because Nia knows, this is all time and energy and money for me to just even keep doing this content. So if at kind of like any of these companies, if at a future date I ever thought Fundrise wasn't the best option to go with real estate without having to manage your own, I'll let you know.
Justin's not a sellout, guys. Don't worry. He wouldn't have picked something unless he liked it. We have so many